Are you one of the 80% of investors who lose money in the market? What's going on here? Are people just not doing their research? Most people struggle with investing because they don't have a solid understanding of the market, and they often make emotional decisions. They buy high and sell low, which is the exact opposite of what you should be doing. Let's dive into our first tip: don't put all your eggs in one basket. For example, if you invested all your money in Enron back in the day, you would have lost everything. But if you had diversified your portfolio, you would have been able to weather the storm. A study by Fortune found that investors who diversify their portfolios can expect a 15% higher return on their investments. Our second tip is to avoid emotional decision-making. For instance, during the 2008 financial crisis, many investors panicked and sold their stocks, only to miss out on the subsequent rebound. If you had held on to your investments, you would have been able to ride out the storm and come out on top. According to a study by Forbes, investors who avoid emotional decision-making can expect a 20% higher return on their investments. Our third tip is to do your research. Don't just invest in something because it's trendy or because your friend told you to. Take the time to read up on the company, its financials, and its potential for growth. For example, if you had invested in Amazon back in 2010, you would have seen a return of over 1,000%. But if you had invested in a company like Blockbuster, you would have lost nearly all your money. Our fourth tip is to have a long-term perspective. Investing is a marathon, not a sprint. Don't expect to get rich quick, and don't get discouraged if your investments don't pay off right away. According to a study by The Motley Fool, investors who have a long-term perspective can expect a 25% higher return on their investments. Our fifth tip is to avoid fees and commissions. These can eat into your returns and reduce your overall profit. For example, if you're investing in a mutual fund with a 2% management fee, you could be losing out on thousands of dollars in returns over the long term. In summary, to avoid common investing mistakes, make sure to diversify your portfolio, avoid emotional decision-making, do your research, have a long-term perspective, and avoid fees and commissions. By following these tips, you can increase your returns and achieve financial freedom. Don't forget to subscribe to our channel and leave a comment below with your favorite investing tip.